10 suburbs in Texas that were supposed to be the future just got a reality check. And now they're facing a housing crisis that nobody saw coming. This is the story of how the Texas housing dream turned into a nightmare. And it all started with a pretty simple idea. Back in 2020, something changed. COVID hit. But instead of staying home, millions of people suddenly realized they didn't have to go to an office anymore. Remote work became an option. And that meant one thing. You could live anywhere. So where did everyone want to go? Texas, specifically, the suburbs of Texas. Think about it. For decades, people looked at expensive cities like San Francisco, New York, and Los Angeles and thought, I can't afford this. But then someone realized, wait, I can work from anywhere now. I can go to Austin, Dallas, Houston, San Antonio, and get a massive house, pay way lower taxes, and still make the same Silicon Valley salary. It was perfect, and it wasn't just tech workers. Investors started pouring in from California and Arizona. Entire companies were relocating. Between 2020 and 2022, net migration to Texas hit over 122,000 people in a single year. That's not just a lot of people. That's an absolute flood. In 2021 alone, approximately 300 people per day were moving from California to Texas. That's a moving truck every few minutes, 24 hours a day. 4 years. The housing market exploded like nothing anyone had ever seen before. Home prices across Texas jumped 40% between 2019 and 2023. Some areas were even crazier. Austin prices went up 43% over that same 4-year span. Dallas, Houston, San Antonio. They all went nuts. Bidding wars became the norm, not the exception. Homes would list on a Friday and have 5 offers by Sunday. Sellers were turning down requests because they had too many. The market was so hot that homes were selling before the paint was dry, literally. People were buying homes they hadn't even finished constructing yet. Banks and developers looked at this and saw one thing: endless money. So they built, and built, and built some more. Texas led the entire nation in new home construction. In 2024 alone, the state issued 15% of all new home permits in the entire country. Think about that. One state, 15% of America's new homes. Developers convinced themselves this would never end. That demand would stay this high forever. That migration would keep pouring in forever. That prices would just keep going up forever. And for a moment, it felt like they were right, but here's where it gets wild. All those things that made Texas attractive started falling apart, fast. First, the migration stopped. Not gradually. It just stopped. Between 2022 and 2024, net migration to Texas fell from the 122,100 people to 85,100. That's a 62% drop. In 2 years. Let that sink in. The wave that lifted everything up suddenly got cut in half. At the same time, mortgage rates started climbing. In 2021, you could get a mortgage for around 3%. By 2023, they were pushing 8%. That's a 23-year high. Suddenly, that $400,000 house wasn't affordable anymore. A mortgage that cost $2,100 a month in 2021 now costs $3,500 or more, just from interest rates. Before you add anything else, but wait, this next part changes everything: insurance. Home insurance in Texas didn't just go up a little, it exploded. In 2023, insurance premiums jumped 21%. Then in 2024, they went up another 19%. And that's just the statewide average. Some people saw premiums spike 40, 50, even 78% in a single year. The average annual home insurance premium in Texas is now around $3,800. In some places like Houston, it's over $6,000 a year. That's more than double the national average of $2,100. Why? Texas gets hit by more billion-dollar disasters than any state in the country. In 2024 alone, Texas experienced 169 tornadoes, 878 major hail events, and severe hurricanes that caused over $45 billion in damage. Insurance companies started pulling out of the state. Progressive stopped writing new policies. Farmers started scaling back. Even major carriers were restricting coverage. The ones that stayed kept raising rates because they were losing money left and right. Property taxes got worse too. Since Texas doesn't have an income tax, they make money on property taxes. And as home values skyrocketed, so did the tax bills. A lot of people didn't realize this when they moved to Texas thinking they were getting a tax break. They were, compared to California. but their property taxes were still climbing hundreds of dollars a year. For some homeowners, the math became impossible. So what happened next was inevitable. Developers kept building because they had committed to these projects. Builders can't just stop. They'll go bankrupt. So they kept pouring money into subdivisions even though the demand had vanished. Inventory, which was basically non-existent in 2021, started climbing. Then it climbed some more. By April 2025, active listings in Texas hit 123,000. That's 53% higher than normal. In some suburbs, inventory doubled. In others, it tripled. Homes that used to sell in days started sitting for weeks, then months. Now you've got this strange situation. New homes are being built. Existing homes are being listed for sale. And there's nobody buying. At least, not at the prices sellers want. Suddenly, all those developers who thought they were geniuses had massive backlogs of unsold homes. Real estate investors who flipped homes for profit started getting crushed by higher financing costs and less competition. Margins disappeared. Money that they were making got wiped out, and here's what sellers didn't understand. The rules had changed. Prices started falling. Now, if you wanted to sell, you had to cut prices. Price cuts became common. By August 2025, over 33% of listings in the Dallas area had been reduced. That's the most price cuts they've seen since the recession. Home prices started sliding. Austin fell 6%. San Antonio dropped 2%. Dallas started declining. This wasn't supposed to happen in Texas. This was the market that always went up. But which cities got hit the worst? And what's the end game here? Let me tell you this. Let me walk through the 10 markets where this correction became a full-blown crisis. Because while Austin and Dallas are big names, there are smaller suburbs that got absolutely wrecked. And they're going to show you exactly what happens when you build too much, too fast, and the buyers disappear. Number 10 is Leander, north of Austin. This was the symbol of the tech migration. Between 2020 and 2023, prices went up 60%. People were moving here to escape Austin's crazy prices. But now inventory has more than doubled. Median prices are down 13%. Developers are offering free appliances, rate buy-downs, gift cards, just to move inventory. Property taxes in Williamson County climbed. HOA fees ate into budgets. Insurance premiums shot up. Families who bought at the peak are watching their home values drop, while their mortgage payments stay the same or go up because of taxes and insurance. The cranes that used to dot the horizon are gone. Construction has stopped. Retail centers are half empty. Number 9, Frisco. This was Dallas's crown jewel. Great schools, corporate headquarters, master plan communities that seemed perfect. Home prices peaked in late 2022. Now they're down 11% and listings have tripled. The supply of expensive homes far exceeds buyers. Property taxes are punishingly high. Insurance premiums soared after hail and wind damage. The investor rush that came from California dried up. Flippers who profited off bidding wars are sitting on unsold inventory with erased profits. Downtown feels different. Less energy. Number 8 is Conroe, Houston's northern escape. In 2019 to 2023, it was one of Texas's fastest growing markets. Builders couldn't pour foundations fast enough. Now inventory is up 95% year over year. Sales fell a third. Builders are cutting prices by $30,000 or more. Flood insurance doubled. Standard homeowner policies spiked. Property tax reassessments piled on thousands more each year. You thought that was big. Try neighborhoods like Wood Forest where lawns are unkempt and construction is stalled. Local businesses that thrive on new home traffic are slowing down. Number 7, New Braunfels. The perfect middle ground between Austin and San Antonio. During the pandemic, it became one of the most desirable spots in the entire country. Builders rushed in with master plan communities. But by 2025, that growth drowned it in supply. Inventory more than doubled. Home prices fell 14% since 2023. Homes that once sparked bidding wars now sit for months. The hybrid workers who moved here for flexibility are being called back to offices. Local realtors describe the market as frozen. Number 6 is Mansfield, North Texas. This was the quiet achiever. Great schools, green parks, access to Dallas and Fort Worth. Perfect for middle-class families. Now active listings are up 82% year over year and pending sales have plunged. Developers are staring down streets of empty, unsold homes. A mortgage payment that cost $2,200 in 2021 now tops $3,800 when you factor in taxes and insurance. The affordability that drew people here has vanished. Rows of luxury homes sit dark at night. The construction boom created saturation instead of prosperity. Number 5 is Pflugerville, just north of Austin. One of Texas's fastest growing cities and a refuge for tech workers. Escaping Austin's sky-high prices. Between 2020 and 2022, neighborhoods expanded overnight. Homes sold before the paint dried. Now prices are down 12% and nearly half of all active listings have seen multiple price reductions. Days on market have doubled. Remote workers are quietly leaving. Traffic has worsened. Property taxes surged. Insurance costs are punishing. The city's rapid infrastructure projects haven't kept up. Schools are overcrowded. Road projects are unfinished. Entire blocks of identical new builds stand half empty. Number 4 is Katy, Houston Metro. Once the pride of suburban Houston. Master plan marvel of good schools and safe neighborhoods. From Cinco Ranch to Cross Creek Ranch, it was the model of middle-class success. But foreclosure filings in Harris County are up 28% year over year. With Katy leading the surge, homeowners who saw their properties as foolproof investments now face rising costs and falling values. An average new build mortgage that cost $2,000 in 2021 now exceeds $3,400. Families who moved here for affordability discovered it's anything but. Builders are slashing prices. Investors are backing out. Rental demand, which was a safety net, is shrinking. Retail corridors are slowing. Neighborhoods that once thrummed with activity now sit still. Number 3 is Georgetown, Central Texas. Once the shining symbol of charm immune to Austin's overheated chaos. Between 2019 and 2022, it was one of the fastest growing cities in the entire United States. Population swelled nearly 14%. But now inventory has nearly doubled. Home prices have slipped 10% year over year. The pace of sales has slowed to a crawl. Affordability has vanished. Rising property taxes and insurance premiums have driven monthly costs sky high. A mortgage that cost $2,100 now exceeds $3,600. Even retirees, a key demographic, are feeling the strain. Many bought investment properties now worth less than they owe. Number 2 is McKinney, Dallas Metro. Great schools, strong infrastructure, booming job market. Between 2015 and 2022, home prices soared 80%. Now, after explosive growth, the housing pipeline turned into a backlog. Active listings are up 90%. Average days on market have more than doubled. Homes that sold in days linger for months. The cost of living has outpaced the salaries that drew people here. Property taxes in Collin County are some of the highest in Texas. Insurance rates surged after severe weather. Construction costs refuse to fall. Number 1. Round Rock, Austin's crown jewel of stability. A model city. Top schools. Booming tech jobs. Dell. Families saw it as the perfect middle ground. Not too crowded. Not too pricey. But in 2025, that balance is gone. After years of record migration and speculative building, the housing market hit a wall. Home prices fell 9%. Listings surged 70%. Builders are slashing incentives to unload inventory. The bigger issue, costs have outpaced reality. A home that cost $1,900 a month in 2021 now runs closer to $3,500. Higher taxes, steeper insurance premiums, utilities that climb every month. Even well-paid tech professionals feel the strain. Newcomers from California discovering that Round Rock's affordability advantage vanished. Restaurants and small businesses that thrived during the population boom see slower weekends. Construction crews are downsizing. Retail plazas sit half empty. So where does this go from here? What's the end game? Well, here's the thing. Experts don't expect a full crash like 2008, but they're predicting more pain. Home values could drop another 4% statewide. Austin could fall further. Some analysts think prices could be overvalued by 15 to 20%, which means more decline is coming. But here's the kicker. Even if prices stabilize, affordability isn't coming back. Not anytime soon. At least not to what it was. The state needed about 306,000 homes to keep up with demand. Even with all this building, they're still short. And now developers are pulling back. Investment is slowing. Job growth in Texas is softening. Migration has cooled dramatically. The supply of homes is finally climbing, but the demand keeps falling. What this means for people living in these communities right now is complicated. If you're a buyer, it's good news. You finally have leverage. You can negotiate. You can wait. You have choices. If you're a seller, you need to price competitively. The days of listing high and letting the market do the work are gone. If you bought during the boom, well, you might be underwater on your mortgage soon. Your home could be worth less than you paid for it. Your equity could evaporate. For investors, it's devastating. Entire portfolios are bleeding money. Fix and flip projects are no longer profitable. Rental properties that were supposed to be cash cows are struggling. The bottom line is this: Texas became what everyone was running from. It became unaffordable. Home prices, property taxes, and insurance premiums combined have created a situation where even six-figure earners are struggling. The dream of affordable living in the Lone Star State is gone. It was replaced by the same expensive housing market that exists everywhere else. And now all these suburbs are learning the hard way what happens when you build too much, too fast, and the buyers disappear. The Texas housing miracle wasn't a miracle. It was a bubble, and bubbles always pop. It just took a little longer than everyone expected.